watching SFF 2021. The market for sustainable finance is rapidly growing in response to the climate emergency. Despite impressive recent growth, the sustainable finance market has still a long road ahead to reach maturity, with many challenges still to face. So, to discuss more about all of this, a panel of experts made out of Zoë Knight, Managing Director and Group Head of the HSBC Centre of Sustainable Finance, WWF's Chief Executive Officer Raghunathan, Sasja Beslik, Head of Sustainability of SDG Impact Japan, and Marty Dropkin, Fidelity's Head of Asian Fixed Income. To moderate this conversation is Amit Gupta, Chief Executive Officer and President of Ecosystem Singapore.
Good afternoon, good evening, good morning, wherever you are. And thank you for joining this session. Welcome to the Global Leaders Roundtable that discusses the scale-up of sustainable finance for a green recovery. The timing of this session couldn't be any better because it coincides with COP26 that's taking place in Glasgow, where global leaders are discussing the challenges, the implications, and potential pathways to safeguard the future of our planet and future generations. To quote Sir David Attenborough from his speech at COP26, here's what he had to say. In my lifetime, I have witnessed a terrible decline. In yours, you could and should witness a wonderful recovery. So on that note, I want to welcome my panelists, the leaders who are shaping the future of sustainable finance every day. This is what you guys live and breathe. So welcome Zoe, welcome Raghu here with me in Singapore. Welcome Sasja, welcome Marty, who's based in Hong Kong. So really look forward to a great discussion. And here's some good news. The volume of investment in sustainable finance is increasing rapidly, we know that. We've seen that. There really is an impetus that's being driven across the ecosystem. But there's also some bad news. It's not scaling fast enough, and I think there's a lot more that needs to be done.
It's not scaling fast.
We've got limited time. We've got a lot of interesting perspectives to get from all of you, so I'm going to get straight into it. Zoe, I'm going to start with you because you are at COP26 as we speak. So you're in Glasgow. You've got fantastic perspective. So if I start off with you, some of the research shows that in order to achieve net zero emission goals by 2050, the volume of climate financing will have to grow over the next 3 decades by almost 5x to 8x of the current volumes that we are seeing. So to ease off into the discussion and just get everyone on the same page, what does a net zero ambition really mean in practical terms for institutions?
Thank you, and I'm so delighted to be joining you all from the grey skies of Glasgow. There's a lot going on here, and I'm but essentially, what we really need to do is get on with translating that net zero ambition into reality. And that means, for a bank, several things. It means becoming net zero from an operational perspective, becoming net zero from a supporting our clients perspective, and also becoming net zero from our financed emissions and supporting innovative solutions. So, you know, in terms of what we at HSBC are doing to support clients, we've publicly committed to facilitating between 750 to $1 trillion, that's to $1 trillion of financing over the next 8 years. And that's all about looking at what our clients' transition plans are, whatever sector they're in, whatever business line they're operating in today, and figuring out how to drive the investment flows that are going to help them achieve their goals. Now, that's critical. The other point that is really important is this mobilization piece. And we can't mobilize finance alone. We really need to work across the industry to get more people on board. And what HSBC are working on in that is an initiative called Fast Infra. It's one of the key initiatives from COP on mobilizing finance to accelerate a sustainable transition in infrastructure. And the main point here is to provide a labeling system that helps institutional investors cut through what sustainability really looks like in these projects. So we've established that, we've announced it, we're pushing it at COP. And then secondly, from a Singapore perspective, and then I'll stop and open it up to my colleagues, fellow colleagues on the panel to hear their views. We recently launched a 150 million seed-funded platform in partnership with Temasek. And this is really all about catalyzing marginally bankable projects. One of the bottlenecks that we've seen over many years in this space is de-risking projects and really being able to get them to the market and get capital in. And so what this partnership does, along with the Asian Development Bank and Clifford Capital Holdings, is establish that catalyst credentials to be able to springboard those projects into the public domain and into a wider institutional base.
Does anyone want to contribute further to that question and add on to anything that Zoe shared? Otherwise, let me ask you a question, Sasja. You've been an activist investor, if you're all right with me using that term for you, for a number of years. And I wanted to get your view on where we stand today in terms of what's being done towards scaling up sustainable finance and what more needs to be done across the board to accelerate the growth.
Thank you very much for the invitation. It's a pleasure to be here. I have a bit of an echo, and the sound is not really working very well for us, I guess, but I'll try to do my best. The question is really relevant because for the last 3 to 4 years, you had a huge inflow of assets into these kind of products. And it has been not only the interest from institutional market, but it's gaining traction also in the different client segments, I would say both private banking, wealth management side, but even on the retail side. One of the biggest challenges is the fact that these assets that have been gained in sustainable investments are not really creating the tangible change of things on the ground. And by doing so, they are creating a lot of questions about the validity of these investments as a tool to actually create what we want, which is sustainable transition. So from that point, I think what is relevant to address is that the new challenges related to sustainable investment products will be related not only to develop them with the objectives at hand to improve things on the ground, but also it will entail the engineering of new next generation funds that will have a clear targets and have a more, I would say, of a regional and industry character, targeting a transition where it actually happens with the tangible outcomes and also tangible results created by them. One of the reasons why I'm interested in this space and why SIJ in Japan is working with this is that we believe that there is not only the greatest leverage and opportunity by investing in next-gen companies, but also creating a next-gen financial tools funds that will create that tangible change. And I think that we clearly see the interest in this space, not only in Asia, but also in Western Europe and the US.
Great. Well, thank you. Thank you, Sasja. Marty, I know you're waiting to get going on this, and you've got quite a few viewpoints on this. Are you seeing a real impetus from clients?
Yeah, no, and thanks. I echo my colleagues. I'm really pleased to be here, and thank you so much for the invitation. We are seeing an impetus from clients, and I pick up on what Zoe and Sasja just highlighted, which is the speed of change is certainly increasing, but it's not just about the quantity of investment, it's about the quality of investment. And I think that's probably the key area of focus. And I think Sasja talked about measurement. I couldn't agree more. We need to look for tangible activities that we can demonstrate in portfolios where we're seeing improvement. And we ourselves at Fidelity have committed to having the carbon output of our investment portfolios by 2030 and then net zero by 2050, which I think are admirable targets themselves, but in a way, they're just words if we don't put it to action. And I think when I speak about quality and quantity, I think one of the things we really need to focus on with sustainable investing in particular is holding companies, holding issuers up to the right standards. And so, my own background is very heavily involved in fixed income. So we're seeing a heavy influx of and large issuance of green bonds and sustainable linked notes, which I'm sure many in the audience will be familiar with. Unfortunately, some of the targets that are attached to some of those sustainable linked notes, which will increase the cost of capital if issuers don't achieve certain targets, aren't aggressive enough, I think. And I worry a little bit that we're focused a little bit on the quantity in that regard. So we look at the large amount of green bonds that are issued and are just sort of putting those numbers down on a page, but we really have to focus on the quality of that, making sure that we're putting aggressive enough targets in bonds that companies are issuing, making sure that we're holding those companies to those standards, and making sure that when they don't meet those standards, that there's a meaningful adjustment in the coupon or the cost of capital that the company faces. So I guess I'm sort of introducing a new aspect to it. So yes, we're seeing huge demand, both from the wholesale, the retail, and the institutional segment. And I think there's a bit of an educational process that we need to go through in order to help clients understand what they're buying and how the impact that they're hoping to achieve can take place.
I think you raise a very valid point on measurement, and I know that Raghu's itching to go on this. And
I think firstly, let me address the point on net zero commitments. We all know that public sector as well as businesses have pledged to reduce carbon emissions by more than 70% already. Now, what we really want to see as WWF is that these commitments are backed by science-based targets and real action. So that is number one. The second point I would like to make in respect of net zero emissions is that it is not simply a question of transition from fossil fuel and energy. It is the big issue out there is also how do we promote sustainable land use. So agricultural emissions are one of the key contributors for climate change. So having said this, I think the question now is there's a lot of finance wanting to flow into sustainable programs. What we see on the ground is it is not very easy to curate projects that are amenable for sustainable finance to go into, simply because of the issue of standards, what Marty just highlighted, that the standards are not the same. Different people have different assessment criteria of what they deem sustainable, and typically money will try to find its way to the project that it can most easily get to, right? And therefore, the quality of the projects becomes suspect in many cases. So that is why, pointing to Sasja's earlier point, what we do not see is tangible change happening on the ground, despite the fact that a lot of finance is actually flowing through into these sort of programs. But there is still hope out there, and I think we are in the early stages of a revolution, which is very much needed in our vision to go green and become sustainable.
Yeah, no, look, and that's why I think the whole discussion around sort of definitions, data, and disclosures, I think becomes absolutely relevant. I think, Marty, you touched on it. Raghu, you and I have talked about it before. IFRS recently announced the setup of a new standards body, ISSB. Now, I think it's a big leap forward, at least that's my perspective, but it'd be great to get a viewpoint. Zoe, I mean, you're at COP26, you're where all the action is right now. How do we see this helping us move forward in the right direction? Do you think it's going to have an impact in terms of being able to bridge and bring some sort of interoperability across jurisdictions?
Yeah, absolutely. And I thought what was interesting about the announcement is the multi-location basis of the initiative. But I think what's important is picking up on a few of my fellow panelists, this point about real emissions outcomes is what we're looking for, and we're looking for finance to be the enabler of those real economy-wide emission reductions. And part of the way of doing that is understanding exactly what capital is being deployed for. Now, this sounds really obvious, but until we had the birth of the labeled product market, you know, capital was going in for a multi-purpose uses within organizations. So whereby you may have had a new capital origination through the debt markets for a specific growth agenda, it was unclear as to exactly how those proceeds would be climate aligned or not. Now, with the transparency around labelling, whether it's sustainability linked or green activities, we really have a mechanism to show from the corporate side, corporates to talk about whether they are actually channeling capital in a way that aligns with their climate ambitions, i.e. avoids greenwash. And for investors, it allows them to be much more closely connected with the mandates that they're putting forward themselves on net zero alignment. Now, the tricky point here is that historically, not everybody's agreed on what's green, what's not green, and all of the transition pathways in between. So we're getting to this really crunchy stage of addressing climate where within sectors like steel, cement, shipping, aviation, areas where a lot of times they're providing solutions for the climate problem, i.e. building wind turbines, but actually the processes that they have to go through also are about delivering net zero emissions outcomes as well. And for the investor and banking community, really understanding what a pathway looks like and a credible pathway looks like is really important. And this credibility factor is something that we're bound to see take much more of a bigger prominence in the years going forward, because of course nobody wants to be greenwashing. We really want to be solving these real economy issues and getting emissions down.
Does anyone want to add to that? Marty, perhaps?
I think Zoe is addressing something that is very, very important, and that the fact is that the complexity of sustainable investment is going to increase, and it's going to increase because for that very reason Zoe is talking about that crunchy space, understanding both what pathways they are on, also what the end goal and end result of these actions will be. So, you know, I think it's also relevant to discuss in this space that the current sort of offering when we talk about sustainable investments as a vehicle to create this change and support this transition is actually not really sufficient. And going back to the green bonds, or going back to the quality of them, and going back to the sustainable investments as a toolbox today, it's a very shallow sort of a water in terms of how they are done, and also very shallow in terms of what results they can achieve. So I think you can anticipate, as I said earlier, that the next 3 to 5 years you will see a number of developments, revolution of sustainable investments, basically in all levels, all the different asset classes, because it will need to follow the complexity of the world that will be throughout all different sectors in the transition demanding completely new type of solutions, completely new type of products. And I'm reiterating that I think also much more regional focus than before. Although we have a case where you know, EU legislation and what's going on in the US and you know, alignment with Asia will probably be there in a couple of years as well. But still, I think most of the challenges we have on the sort of investment side is transparency issues, it's metrics, it's you know, certification of what actually is happening on the ground. So all of that will need to be trickled down into the product flora that needs to be developed, being that, you know, asset management products or lending products or debt products or whatever.
I would echo what Sasja is saying. In ASEAN, we do assessments of banking and asset managers regularly every year. So these are called the sustainable banking assessments and the respond assessments that targets asset managers. What we see is that at a high level, there is a lot of organizations and particularly financial institutions who commit to sustainability goals and champion responsible investing. But where we find the action to be lacking is the translation of those policies down to a level which can be implemented on the ground. So the actual, when it comes to actual channeling of funds to sustainable projects, that is where the clarity is not there. And we also notice that in ASEAN, only 24% of banks actually disclose their climate strategy publicly, right? So you can see that financial institutions themselves have to do a lot more first to get to a point where they can truly champion sustainable investments. And that is exactly what Sasja was indicating.
Yeah. And obviously, as we talk about disclosures and consistency, data plays a big role in this in terms of, what role can technology play in bringing consistent and compatible data sources together to be able to help us understand better that level of transparency?
I mean, we need alternative data, alternative ESG data. The current data sets we have access to are insufficient in many ways and not granular in the way we would like to have them. And we also need a forward-looking type of data sets, because the current ESG investments are based on the backwards-looking information annually produced by companies, then trickle down in the different models that MSCI and Sustainalytics and others are providing to us. So we really need help to certify and verify some of this data, and I think it's going to be very interesting to see solutions in that space for the next couple of years.
Yeah, I think just jumping in, I think you found a bunch of like-minded individuals who all agree that we have a lot to do. Look, I'm probably one of the more optimistic fixed income investors you'll meet in that regard, because I think, I do think this is a problem that we can solve and we will solve, and there's a collective capital and collective interest in order to solve it. The challenge we face is the timing. I mean, we all know what the emergency is that we're facing, and how do we move fast enough in order to meet this challenge? And I'm not going to propose that I have an answer to that right now, but I think the positive thing that I see is just the intellectual capital that's being applied to solve some of these problems and to address the data concerns that we're all talking about. I think about rating agencies. Dozens of years ago, there were probably loads of them, and that industry is consolidated, and now we've got standardization there. No doubt the same thing will happen within the sustainability area and ESG area, but we don't have that much time to solve it. So collectively, we've got to work together to make sure it happens.
Yeah.
Actually, technology will play a big role in conservation, and we are totally convinced about it. Especially some of the challenges are so difficult to address. Whether be it in, whether conservation on the ground is actually happening, whether forests are being protected, whether after the project is completed, how do you make sure that the program still stands or it's not completely reversed out? So these will all require monitoring and, in many cases, analysis of data. So without the use of technology, I don't think we will be able to address the many challenges that the world faces. So it is human commitment, aided by technology, that will drive sustainable change.
And who do you feel are the stakeholders that need to come together to make all this happen? I mean, the technology, we've been talking about technology for the last 3 days, and we're talking about Web 3.0, and there's a lot of progress in that. But we also know that even within an organization, when you're looking at digital transformation, it's a pretty complex exercise. How do you bring that cohesiveness across this very, very broad set of ecosystem players?
I think one of the ways could be to diversify the cooperation between different sectors, financial institutions, and providers of technology, because different sectors will have different challenges and different time spans where they need to shift their business models in order to be able to provide sustainable solutions going forward. Right now, we are looking on a global level to scale up whatever solution we have, to scale it up as fast as we can. But I think, looking at it from investment perspective, it will be very interesting to cooperate, let's say, with a small, medium-sized sector approaches in Asian context, and look at the way how we can develop the data sets and analysis models that will provide insights to the investors together with the industry, so we can find and trickle investments that way, including using both lending side and the investment side. And that is the reason why we've been looking at the way how we can develop, investments in a medium-sized companies in a very narrow sense with a clear sustainability objectives that are measurable in line with the Article 9, which is a European type of objective setting standard for these kind of new next-gen products. And it's possible, but it requires much more resources. I mean, this transition is going to cost. It's going to cost both companies and it is going to cost investors. And we need to be able to provide new funds and new investment solutions that take that into account. So, going back again, I think, climate change is a global issue with the local consequences. And this is something that it also needs to be reflected in investments and how we shape the investments and how we construct them and also deliver the results to clients that are expecting these results.
Just to build on that, going back to this point of we're getting much more nuanced as we go forward in terms of where the accretive impact really is. Data is fundamental to helping us with that, right? Because if we want to compare emissions coming from either industry or power or oil and gas or different sectors, we need to know things like the life cycle of the existing facility and whether it's short or long, whether it's specifically carbon intensive source versus perhaps a cleaner one, and really try and figure out where the best way of either exiting early or supporting scale up in clean is really going to come, because to get this done in the speed that we need to, as we've mentioned earlier, we need to get a lot more effective at deciding which locations and technologies we want to prioritize, and which activities and locations we need to exit first in a just and equitable way, and how we create the financing vehicles to actually facilitate that exit as well, right? So all of these activities are supported by an underlayer of data, which helps us to make good decisions. And therefore, there will be, as Sasja mentioned, the new funds that are coming on stream to address those nuances, but they won't be particularly, or there's a risk of lack of integrity if there isn't the underpinning accurate data to help shift that conversation forward and move the dialogue to a place where it's a sensible one around what to prioritize and what not to prioritize in the in-between sectors.
Just a short comment. This is brilliant, Zoe. This was brilliantly expressed, because it is about the effect. We need to create the most effect where it actually matters. So far, sustainable investments have all been about compliance certain rules, compliance certain policies, and so on. We're moving from that space into effect space. Where can we create the effect? And that is going to demand completely different set of products and different set of approaches. So the sustainability investments in 2 years from now will be completely different from what you've seen so far.
I might just add, I completely agree with everything you just said, but another layer on top of that, or maybe beneath it, which is the aspect of engagement and the aspect of management commitment to achieve the goals. And I think that's where, Amit, you asked the question, how do we come together? Well, I think that's where we all have to act collectively. And, we as one asset manager are not going to achieve the goals without working in connection with, syndicate desks and banks and activist investors and you name it. And I think, do we exactly know how we're all going to align? Probably not. But I think this idea of management commitment is a really important one, and it's a tough one. We need the data, but sometimes we also just need to look people in their eyes and make sure that they're absolutely committed. Because I think, Sasja, as you've just said, the types of investment vehicles are going to change. The measurements are going to change. The bar keeps moving on whether it's SFDR or Article 8, how we all achieve that. We need the commitment from ourselves, from asset managers, but also from companies to make sure that we continue down this journey.
I think, we are all in violent agreement that impact is most important, but there are real practical challenges to making impact happen at scale. And I think that is what the whole theme is about. We've got finance that is ready to move into places, but it's not reaching these sort of organizations or spots or projects or programs that really need to change. And a lot of it is due to lack of awareness. If we get caught into all the technical mumbo jumbo, people lose sight of reality, and they think the technicality is what defines the outcome. In reality, people need to understand that this is the climate change and loss of biodiversity are issues that affect all of mankind, and it is part of their responsibility, both as individuals or as when operating within companies, to make the necessary changes that will help promote sustainability and address climate change. For example, we've got a huge pool of nearly 4,000 SMEs in Singapore, right? And to help all of these businesses transform and get them to focus on managing emissions, reducing energy use, managing waste, there's a lot of effort that is required. So part of this challenge can be addressed through creating awareness, educating, hand-holding, supporting, and then the finance can also come in to help them transform. So this is one of the ways we believe that we all probably need to work together in concert with government who can help set the right policies, together with financial institutions who can support with financing. And then through individual action, the role of the consumer is going to be very important, who will then create demand for products and services that are more sustainable, which will force businesses to transform themselves. And that is how we will collectively accomplish this huge task that lies ahead of us. So the next 20, 30, 40 years are going to be really exciting for mankind, because the scale of transformation that we are likely to witness is going to be unprecedented. It will be like another industrial revolution that we are embarking on. And it is not going to be easy. It is going to be requiring sacrifices from everyone. But we have been so used to pillaging natural resources from this planet that any shift is going to be it's going to cause withdrawal symptoms, right? So that is what we all need to accomplish. And we need to hold hands together in moving forward on this journey.
No, well said. Truly the man who represents the organization that is making it their ambition to provide sort of ecological preservation. So well said, Raghu. And that really brings me to the point around the consumer, right? Because that's the one set of stakeholders that we should talk about. I mean, I don't know about you guys, but I've got twin boys who are 14 years old, and I literally, I'm not exaggerating, in the evenings, I end up bumping into things in my apartment because they keep switching off all the lights. And that's the level of awareness they have. They're going to that extreme level because they actually really understand. They live and breathe this from a very early age of what the challenges are. And we are trying to condition ourselves. They come preconditioned, pre-packaged. So the fact that this new generation is going to come into the workforce, they're going to be the employees of large global brands. They're going to be the consumers of large global brands. How much is that impacting, to your point, Marty, that whole getting the management teams on the journey, how much is that really impacting and reshaping the thinking that brands are putting towards not just the messaging, but really putting the action behind the intent as well?
I mean, that's what's going to drive the change, to be very blunt about it, because the end investors, whether they be, think about an institutional investor who will have, its pension constituents as its clients, or retail investors. It's those individuals and their desire for change that are really driving us and others to follow through with everything that you've just discussed, Amit. So, do they all know what they want? I don't think they do today. As has been raised, there's different standards, there's different expectations depending on what part of the world we're in. But I think all that's going to, some will be leaders and some will be followers, but I think we're all on the same journey, and it just might be a matter of time before everybody kind of aligns with each other.
I would like to add that many global brands are actually aware of what is needed, but some of the issues are so difficult to solve that there is no solution that exists today. For example, if we take the case of palm oil, and palm oil is consumed by almost all industries, and it is included in small quantities in almost every product, whether it be whatever big brands you may think about, right? Food products or whatever, chocolates, etc. So, but the problem on the ground is that there is a very small window within which you can determine whether palm oil is sustainably produced or not sustainably produced. And that is from the time of plucking the fruit from the tree to the point it gets to the mill. Once it is crushed into oil, there is no ability for anyone to distinguish what is sustainable palm oil versus what is not sustainable. So we in WWF are making steps to figure out how we can solve this challenge of traceability in palm oil. And we are working with local partners who have identified or who are at least got some credible solutions that we think will work in our effort to track first mile traceability for palm oil, especially when it involves operating in remote jungles in Indonesia, right? It's not easy to do.
Yep.
So brands are aware, but there are practical challenges to addressing some of these issues.
Great. I've got one question I want to take from the audience. Sorry, Zoe.
No, it was Sasja. I had just one comment, and I think it's sort of irrelevant from a perspective of what we discussed. We are underestimating interest of the consumers, young generations, and the reason is why we are underestimating that. It's almost like a conscious thing. Is that we are in our industry, we have difficulties to deliver the concrete results. So we sell processes, yeah, and I think the next gen. Both next generation, but next gen ESG products that we want to be able to provide our clients is strategies that can give you both financial returns, which you expected to get, but also a tangible results in terms of what do you actually get when you invest in this. The problem we have, and we had it for a long time, is that it's all relevant and it's not on the absolute level, and it's very difficult for end consumer to actually understand and compare these things.
Yeah.
And this needs to change.
Absolutely. And look, unfortunately, we're running out of time. I mean, you guys, keep doing the great job that you're all doing. Thank you so much. And thank you, everyone, for joining us. Enjoy the rest of Singapore FinTech Festival. And let's hope for a better future going forward. Thank you.